Well, good morning, everyone. This is the Worshipful Company of International Bankers webinar, and I'm very pleased to host this today. My name is Robert Merrett, Senior Warden of the Worshipful Company of International Bankers, and we also have today Professor Scott Moeller of Cass Business School. Welcome, Scott.
Thank you very much, and thank you for having me here today, Robert.
Good morning. And so just to set the scene, the WCIB is a City of London livery company, which is for members working in banking and financial services. And the idea today was to have a high-profile interview with interesting speakers so we could understand some interesting insight into the impacts of coronavirus for banking, for financial services, for higher education and other sectors. And so today we welcome members from the Worshipful Company of International Bankers. We've got students and staff from Cass Business School. We've got members from the Chartered Institute for Securities and Investments, as well as members, we hope, from the Chartered Banker Institute. So a great family of finance professionals, all wanting to hear what we've got today. So Scott, just to set the scene in terms of the questions we're going to cover, could you start by giving us your thoughts on any permanent changes which are going to be coming for banking and financial services as a result of this coronavirus?
Yes, Robert, and again, thank you very much for inviting me here. And there is a very long and very strong relationship that Cass has with both CISI and with the Worshipful Company, and it's nice to be here with you and with them here today. Well, first off, I guess I should say I suspect this is not going to be the last seminar that is ever put on by the Worshipful Company that has over 300 attendees coming into it. And isn't that wonderful? You know, that you can do something, because I suspect that that's larger than most halls that we would be able to hold things in, you know, within the city. And in fact, that's actually quite similar to what I see at the business school, where I'm currently teaching a class of approximately 300 students. And that would never have been possible before we actually went onto an online system the way we have today, albeit hopefully not forever doing it that way. But permanent changes in banking, first off, I think there's a recognition that banks are in fact stronger, and they've been able to weather this particular crisis incredibly well, in my mind. You can see that certainly in terms of failures of banks. This is not the 2008 crisis. Now, of course, that was a financial crisis, and a lot of what happened during that crisis was driven by what was happening in the financial services sector. But banks were stronger after the crisis and came into this particular crisis strong. And I think there's a demonstration that if we can weather this, there's going to be a lot of other crises that we're going to have in the future that we're going to be able to weather as well. We are better capitalized. Our systems are stronger. Our risk management systems are stronger. Our resiliency is better, you know, and even should there be a need to have any wind down of any bank, I think those solvent wind down plans are much stronger as well, should it ever get to that point. So nicely, that's not an issue at this particular point in time. I think in terms of some of the changes that we're going to see, I think we will see people looking at their risk management, and also most definitely, as they're doing their planning, looking forward, and the stress scenarios that all of us are developing, within the industry at all times. None of us foresaw something like this. We did see pandemics and had pandemics in many in banks in many of the scenarios, but that always was localized, and it certainly never went global in the way this did, nor with the speed with which it did. Certainly none of us had backup plans from business continuity planning that saw people working from home to the degree they have. So we are going to be seeing those plans changing in many ways, and I think that's going to be important as well. What we've also seen, I think, is that on the retail side, some very, very big changes as well, with people going online who probably we never expected to go online. Necessity is, of course, the mother of invention, and many people have started to go online who probably thought they never would have to. Just an interesting corollary on that, we probably never thought we would be doing a Zoom seminar like this. We probably would have done this in one of the nice, halls around the city. My own feeling is that we're also, at the point where perhaps it's darkest before the dawn, and we can talk about where the industry is going to be going. But at this point in time, it looks for the moment like it's more of a V curve, than it is a U or an L. So let me pause there a second, Robert, because I don't want to continually drone on that. And
yeah.
Anything
okay,
you want to follow
thank you,
up
Scott.
on that?
Yes. So to set, you've clearly got a lot of thoughts there, which we can go into in a minute. Just to set the scene, though, you're currently the director of the M&A Research Centre at Cass Business School, formerly the CEO, Director of Executive Education there. But just in terms of your banking career, could you just give us a bit of background about your own career in banking and what you've done to sort of set the scene for your own, which obviously sets your own experience in terms of the current coronavirus crisis?
Yes. Banking, I do have a career that spanned 18 years in banking, albeit that was preceded by a period of time in consultancy where I was advising banks. So actually my career started off at Booz Allen and Hamilton, which of course is now part of PwC. And I was basically in a FIG group there for most of that time in terms of advising banks, and then moved to Morgan Stanley in New York to start a 12-year career at Morgan Stanley which took me for 6 years in Asia, where even for a period of time, despite the fact that I'd been working in corporate finance, I was actually the FD for Morgan Stanley Asia, so for all of Morgan Stanley's operations in Asia. Now that might sound more impressive than it actually is, because I went out there in 1987 and Morgan Stanley's footprint in Asia was a lot smaller than it is today. And then went from Asia to Germany with Morgan Stanley, where I did co-manage the German operations of Morgan Stanley as the Geschäftsführer, and then on the Vorstand of Morgan Stanley Bank AG. From there, I went to Deutsche Bank, but that was then Deutsche Bank in London, and I've been here in London since 1996 this time around. And I say this time around because I was here back in 79, 80 with Booz Allen. So London is the place that I said back in 1979, 80, despite the fact that people will remember the winter of discontent and other things, that I really did want to come back here and stay here permanently at some point in time, and I have. And then at Deutsche Bank, I did actually head up one of the M&A teams there. I also ran the global private equity group, amongst other activities, including starting their first global e-business division back at a time when people didn't even know that that banks were in something called e-business. And then I've been at Cass basically since 2002. So.
Okay, so thank you. So one very interesting division you mentioned there, the e-business whole. I mean, that everything's got an E these days, whether it's emails or e-business, or even we should call it e-webinars. But so you mentioned there you were heading up a e-business team in terms of what you were expecting. How do you expect changes in the whole e-business platforms and other innovations to flow now, given that we have moved so rapidly to this technological e-world?
Well, yeah, and actually, sorry, you'll have to humor me here for a second, because you picked up on that e-business. I was actually the first and actually the final head of Deutsche Bank's global e-business division, because when the Vorstand asked me to set up that business, and part of that was because we were doing some proprietary acquisitions that were basically of things called fintech, back in the late 90s. It was they did ask me, they said, wait, you're buying all these little pieces for lots of different parts of the investment bank, but we probably should look on those in some sort of consolidated basis. And they said, we want to actually create an e-business division. And I said, fine, but I said, can I please agree with you that that I'd be the first and only head of this, because if in fact the entire investment bank, and this is back in 97, 98, doesn't become E, then we've failed. And therefore, you're not proposing that I head up the entire investment bank, but only this particular part of it. But there were interesting conversations that I would have. I remember going to the head of the Govey's desk, which is probably one of the more commodity fixed income businesses you can have. You know, and he said, our business will never go E, Scott, or will be one of the last. And of course, they were one of the first. You know, so things change in a much more rapid way than any of us ever might have actually anticipated on that. And I think that's in fact one of the impacts of the coronavirus on the e-business division, is because I think we've accelerated the changes in banking in some areas, and especially in things like fintech, regtech, insurtech, and so on. That we've accelerated that probably by 5, if not even more years, in terms of the adoption of both practices as well as technologies. Also, I think it's accelerated the need to be able to move away from legacy systems even faster in some ways. And that, I think, is going to be the major change on this. I think the trend to the e-business world, you know, has been one that's been going on for decades. But it's just going to be faster now than it was, you know, before. We're all experts now in working at home. Yes. E-business, among other things, allows us to be able to work
yes.
from home. Although some traders, of course, were going in during lockdown, you know, most of the banks weren't. I think most figures were about 5% of staff were actually going into the buildings physically, even at a time when we were splitting them between different buildings, you know, in banks. You know, but you know, so those technologies that are enabling us to do that. And by the way, I'm including in there the technologies to be able to allow us to do that. And I don't mean what IT is doing to enable me to be able to do this kind of call through a VPN, for example, you know, or, you know, and record it along those lines, but also the fact that we need to make sure that compliance and risk and legal, you know, can appropriately monitor people who are working from home as well, you know, and there's a lot to do on that. Knock on wood, I'm doing that right now on my wooden desk that I'm sitting at, you know, but we haven't seen huge cyber attacks during this period, despite the fact that we have everybody working remotely, you know, on systems that probably someone in a security group in a bank, you know, would have said never would have been possible or shouldn't even be allowed. And the regulators might not have allowed that in the past as well. Again, you know, necessity is the mother of invention. If I can come back to what I said before, you know, and we have had to do that, but I don't think we've been cutting corners in the industry in order to be able to allow that. It's turned out that we have been able to quickly adopt, you know, those things in the second line of defense, you know, that are required to allow the first line in order to be able to operate properly.
Yes. Yes. You mentioned working from home. I mean, that's probably where most people are joining us today, because it has been an absolutely staggering shift from the city, Canary Wharf, and all the financial centres to the work from home platforms. But obviously, yes, there's compliance, there's needs to make sure that we keep the regulations and the other rules all satisfied. So yes, clearly right. An important shift, but equally more to come, I think, as people have to start to get back to their offices. But E is everywhere these days. So just moving on then to the banking world and the damage from the coronavirus. I mean, we've seen huge numbers of economic consequences, whether it's to corporates, to individuals, but obviously at some point capital is required to support and to maybe to rebuild. So you mentioned venture capital as one of your divisions previously, and what you looked after. So how do you see the future in terms of the need for venture capital as well as other forms of capital to help compensate for this whole coronavirus?
Well, I do believe, Robert. I mean, excellent question, and I think I might have actually neglected you. You probably were just looking at my bio there, but the last thing I did do at Deutsche Bank was not that e-business division, because I was well past that 18 months that I told them I would stay in tenure there. But the last thing I did is I did run Deutsche's global private equity group, which obviously worked with venture capitalists as well. During that was it was from there that then I went into the university where I am a professor in the practice of finance and do head the M&A Research Center. So I didn't mention, that's what I do. So I keep very much in touch with what's happening in the industry, and have an excellent advisory board that works together with me on that. Nevertheless, just getting to your specific question about venture capital, and if I can expand that also into private equity, just as an asset, just as an industry class, there's a lot of dry powder. And in fact, actually, I saw a figure that was 1.4 trillion just for private equity firms based in the UK alone coming into the crisis. That's a tremendous amount of money, which can be deployed by people who are very smart at identifying winners. And that also exceeds the amount of money, that the government itself has pledged to help industry. Now, we're not yet. Perhaps we can talk about some of the social aspects, of what people will be doing. So I'm not saying that should be deployed necessarily in a way that should be supporting the government. I think very much it will be complementing what the government is looking for, even without that having to be something that's being asked of them, because by putting that money to work, which is of course what they need to do, they will be helping us to crawl our way out of this, this pandemic, economic impact, of the pandemic. The other point to complement that is that's the dry powder, okay? That's the available capital that is there. It isn't just venture capitalists that have that. As I mentioned earlier, banks are coming into this very healthy as well. And lending is still available at historically low rates. And nobody that I've seen, because I am not an economist, but nobody that I've seen, who's projecting economic activity into the future, is suggesting that rates are going to increase dramatically over the course of the next several years. So we're probably in a period of time, and again, I'm not the economist, and this is not a forecast, but this is my reading of what some others are saying. We are in a period of time where that, where that capital to complement the venture capital and private equity dry powder, is going to be available, which just accelerates the ability to be able to, to invest in industries where in fact there will be fast growth. That's also going to be some investment that's going to be in restructuring, because there are going to be assets for sale at bargain basement prices, in certain industries. And I think talking about sectors, there are going to be some sectors that are going to be those where people will be bottom fishing. There are going to be other sectors where people are going to be, trying to catch the rising stars that are taking place. If you think about, for example, TMT and healthcare, where both of those are obviously beneficiaries of what's actually taking place, economically and socially right now. So
okay, so yes, I mean, lending and capital vital, all part of banking world. Just to switch slightly to the education world, and we'll come back to banking in a minute. Obviously, you're currently at Cass Business School. Could you just give us a quick snippet in terms of what you're currently doing in terms of teaching, in terms of your students, and then we'll come on to maybe some more of the banking M&A piece. But what's Cass Business School? What's your role there at the moment?
Well, as I said, my official administrative role within the university is as the director of the M&A Research Center, and that is the leading M&A research center, if I might very humbly say, at any business school globally. It also happens to be the only M&A research center at any leading business school globally. So
Okay.
I can't very much say, that we are leading one. I guess that also makes us the worst one as well, if we're the only one. That takes up about, I would say, about 40% of my time. About 40% of my time is taken up on teaching, and then the university never lets us get away without doing some administrative activities that that are required here, there, and elsewhere. To take up that other that other 20%. And I do suspect that there's a number of my students who might be on the call as well here, and they're the ones who unfortunately have to spend more time being here in class on Zoom, exactly, looking
Yes.
at my face here on this. Anyway, teaching is very, very different right now this term. Every single student is taking their classes now, and every single professor and lecturer are teaching online. We've never gone through a shift that rapid, I think, in academia, in the history of academia. We were all very happily teaching classes, in March, at least here in London. And then within a week and about a week and a half before term end, universities locked down. We did ourselves stop classes about a week and a half before Boris Johnson closed down, entered lockdown on the 20th of March. We did tell our students that to those who felt more comfortable going home, they could. I know in my classes that I've been teaching now in the third term, I do a poll on Zoom here, and about 25–30% of the class is actually physically sitting in Asia while listening to me teach, from Fulham here in London. That's something that we've never had before. And I have to admit, as a faculty member who used to be quite vociferous in saying, the reason I teach is I love the interaction with the students. And the last thing I would ever do is agree to teach online. I suddenly find myself teaching online, and I do miss the physical interaction, the being able to talk to students, in a coffee break, their ability to be able to walk by my office during office hours, but I've actually found that this is actually working. At least it is from my side, and it certainly did, as we found at the end of the term before. But God, is this difficult to do, Robert? It's not.
It's different.
It's not easy shifting everything on. Yes.
No. So in terms of research, and you've mentioned maybe M&A team there doing research, or CBS in general, the Cass Business School. Is there any research in particular that's caught your attention? That's, in terms of research on coronavirus, that's really sort of some forward-looking views or implications that you've really thought, oh, that's interesting, something which you're able to share?
Well, yeah, there are some very interesting studies that have come out, and obviously that's one of the nice things about being part of academia, is that you do see what some other people are putting together. I mean, one of my colleagues, Professor Carolyn Wirtz, has just done a study about the flaws, and this is not going to be encouraging for everybody, but the flaws in the UK's contract tracing system, and why it might not be working as well as some other countries, that they've done, so that's one kind of research that we do. Something that might be quite interesting, but also not counterintuitive, is in our maths and computer science department, somebody did an analysis that showed even during lockdown, the use of Boris bikes, sorry, I'm aging myself, the Santander bikes, was remarkably high. So people were taking that ability to be able to do exercise once a day, and bike riding. And I think all of us are seeing that there's been as many bikes on the road.
Yes.
Not more recently, on that. We've done some work at Cass, and again, it was Professor Wirtz, but also Professor Goodall, who've come up with an employer COVID-19 risk calculator, so that employers can see what the risks of their employees are of bringing them back to the office. I mean, that's fascinating stuff.
Yes.
You know, that you that you can have. But and I'll tell you one other one, just a fun one. Although it is a little bit of a sad commentary, you know, on the S side of ESG of, you know, in today's world is there was a study in the journalism school, also, you know, at City University of London, you know, that during March, male experts on UK news programs was at a 3-year high as compared to female experts. Okay, apparently there were 2.7 male experts to every female expert. You know, so something about, you know, the topic or something about, you know, what was, you know, the areas that were seen to be newsworthy seemed to bring out the male experts and not the female experts. So anyway, just, you know, those are the kinds of things that you see coming out of the universities, even just since mid-March. So
okay, so I see there's some questions coming in. We'll take those in a minute. Just to one bit of research I was particularly interested in is obviously the whole mobility and the reduction in the virus, and then obviously we've all got to become mobile again. You know, social distancing has to at some point be reversed again. We've got to get back in contact. The danger obviously is the virus could spread again, and some really fascinating research as you can look at, you know, people's mobility at home is restricted, but obviously if they do acquire immunity, because younger people do seem to be able to get over it quicker, acquire immunity, that'll help. The masks and the whole sort of hand washing, I mean, that's been important. And then the research around, you know, the testing and then tracing. I mean, it's fascinating how scientific research has flowed very much into the banking world, because banks have got to get people back to work. And as you say, they've got to get, well, how do we get what was an office for 100% down to maybe 50%? Because they really do need to stop the virus amongst this, you know, the staff as part of the safety aspect. So yes, so fascinating research has all been, as I'm seeing it, it's all flowing from academia into from the science world, the business world, into the bank. So a lot more to come, I think, on that, on the whole sort of use of research to help us here. And so just to pick on the social side before we come up to everyone's questions about banking. I mean, obviously difficult times for a lot of people, this whole crisis, whether it's for individuals as well as corporates. The social and the charitable side of banking is so important for us as a company as well as for wider society. What are the, could you just mention, for example, the support that CAS and WCIB have done for your own students? Just to mention that, because as a livery company, we very much try to support people where we can. So could you mention the support that we've done in the past for your own business school?
Yes, and with great gratitude too, I should say. And as I said at the very beginning, and now I see, by the way, we are well over 400 people, you know, who are here. And of course, when you and I were starting to talk, people were still coming into the room, and I think we were about 250 or 300. So welcome to everybody also to this discussion. The CAS is very grateful for the relationship with the worshipful company of international bankers, and it has been a very long-standing relationship, and it extends across a large number of different areas on that. WCIB events are open to the students. We, of course, open our events to WCIB. You know, so you know, that's an obvious one there. But more importantly, for many students, WCIB sponsors a prize every year for best dissertation and paper related to the banking industry, and I know that's very sought after by students. Fortunately, there's been a number of CAS students, because I know that goes across a number of different business schools, and awards get given out per business school, but then also overall. And that is a great motivator, you know, for people to get that sort of recognition, because it is very highly sought after. And also you know, the company does support the M&A and Private Equity Society at CAS, I can add that is the largest society, student society that at the school, or I should say business-related society at the school. And they very, very much appreciate both the ability of the company to assist in helping to find speakers, but also financially, you help them as well to put on those events. It's been wonderful. But more recently, it's very interesting. I just had a Zoom call with the officers of that society, who obviously are not able to be together in person. And all the events that they had planned, from March onwards, had to be canceled. And it was at the insistence of the WCIB to have a conversation about how they were going to do that virtually, that led them to have a conversation with me about what events that they had planned to put together. So I really would like to thank the company for their encouragement of the students, and these are students who will go on hopefully someday to be members, but wonderful that that support is there. So
okay, and well, my own take on the whole impact of coronavirus is how everyone's looking at climate change and how the drops in pollution have been so dramatic because of the change in people's travel habits. That we've obviously got people like Sir Roger Gifford, a past master, who's very much leading events to try and promote climate change initiatives like green finance. We've got, obviously, from a banking point of view, the digital divide between the people who can do this kind of talk and people who can't, and society is so divided there. We've been another past master, Sir Peter Estlin, is looking at the whole digital inclusion and the whole sort of future of bringing people into this whole ability to do the digital techniques. So again, banking is looking in so many ways, I think, to try and help the broader society in terms of, we've got the ability ourselves to do it, but we want to help and finance other people. So yes, there's lots of, I think, initiatives that are going to come out of this coronavirus in terms of banking helping the wider society. So yes, that's very interesting.
And Robert, I would just just to emphasize that more. We've been spending so much time, and you read the front page of the papers, online, and it seems that most of the stories are about coronavirus, and have been. But what's happening on climate has to continue, and I think banks are recognizing that. You can see how banks have been leading with some of the commentary, because of the George Floyd, and the Black Lives Matter that has obviously started back in the U.S., but it's now become a global theme as well. So you've got, if you think about the E, the S, and the G, the environmental, the climate, we can't. And we have to be sure that we're not taking our foot off the accelerator, on that one. That we do need to think about social inclusion, as an industry, and ourselves also as a university, as I say, because I transcend, both industries, certainly with that one.
Yeah.
And if I think about the G side as well, what we need to do to make sure, and it was going back to my comment about, the male experts on leading UK news broadcasts, we can't let that happen. We have to continue to make sure that we're being totally inclusive as well, and making sure that everybody has an equal opportunity. So
yes, okay. So we're very international. I think that's our title, International Bankers. I'm just going to have a look then. Sorry if my finger gets on the screen, because I'm going to be looking at a few. We've got lots of questions, so it's going to be hard to pick out because there's so much interest here. But let's see if we can. There's one here. I mean, just randomly, I'm seeing one from Angela Gaviero. Thank you, Angela. She says, do you see more of a V-shaped recovery, or how do you see consumption returning back to the economy in many of the heavily impacted industries like air travel or leisure? How about, are we seeing a V-shaped recovery? And what about some of these other industries that are really impacted, which obviously we have to bank, Scott?
Yeah, I mean, we've, obviously we've had a V-shaped recovery when you look at the stock market. It went down a bit more rapidly than it went up, but it certainly did not stay down at the levels that we ended up, seeing when the days looked the darkest on that. My own feeling is that, it's a very fragile market right now, and that the market and a lot of the pricing of deals, because I tend to look at it more on things like deals and deal activity. I mean, I should say deal activity is, April, is at a record low. I think it's the lowest since 2009. And most of us are old enough to remember, or many of us are old enough to remember, what that felt like at that point in time. So we're almost pricing in, perfection in terms of our ability to be able to deal with this, and some other event not taking place. So I think it's just a very fragile market right now. Now, I mean, part of your question was on some of the industries, such as leisure, such as travel, gambling, others that have been, incredibly impacted, because of the pandemic. Those become opportunities for companies as well. And and again, my area is on mergers and acquisitions and private equity and corporate finance, but they will have fundraising needs. It's very interesting to see that banks are standing behind long-term clients, even in some of those most affected industries. Most companies or many companies did go down and drew down, to the extent they could, of their credit lines. Although it's my understanding that not all of them used those credit lines then, but they had that as, as available money should they need to do so.
Yes.
We've also seen that those with money, for example, the PIF, the Saudis, and some of the Middle Eastern investors coming in, and taking stakes, which of course is supporting, those companies as well. So.
Okay. Thank you. And now, Sasha Stevenson's asked about regulation. We probably can't have a call without speaking about regulation because it's so important to the banking industry. She was, Sasha's saying, do we foresee maybe a little bit of loosening of regulation given that the economy is so impacted here? I think I know that answer, but what do you think, Scott? I can't see it loosening.
Yeah, no. Yeah. Well, you didn't have to actually, you didn't have to leave the, leave the witness, with that quick statement there. I do not see any loosening either on that. My understanding is that the regulators have been in very close touch on a very frequent basis with, with both the first and second lines of most banks, throughout this period. Even to the degree that there's daily and most definitely weekly calls with some of the major banks, in terms of them trying to understand, what the, levels of activity are, where the stress points are, and how, of course, the banks are coping, with the crisis as it's going along. So that the regulators, have been there. But no, I don't see, I mean, despite the fact that we will see things such as a political decision in terms of, providing, funding, that might be funded to institutions that otherwise might not have had that funding available to them. From the regulatory perspective, for our industry, and I'm saying that quite broadly to mean anything in financial services, but certainly for the banks themselves, which of course, is the, is the headline group, within the name of the WCIB. I don't see any regulations because of the coronavirus, being relaxed. There is a general trend anyway, as you know, Robert, for the relaxation of regulations in some countries, and I'm thinking very specifically here, of North America, of the United States, just because again of the administration there, but I don't see coronavirus as having been one of the major drivers of that. No. Nor do I see it become later.
Okay. Now, maybe a question from Jeffrey Hutton. Will fintech firms now be under greater regulatory surveillance from UK regulators to ensure traceability and also, and so maybe I could just go beyond, because although we talked about regulation for banks, fintechs, non-bank financial institutions, I mean, the financial world is made up of a lot of other key players, hedge funds, insurance companies, other people. How do you see that whole sort of non-bank FI space playing out in terms of their ability to compete and survive, and two, the regulation around them?
Well, yeah, and actually, I've probably been negligent in not saying the word fintech more often than I have here on that. But one of the things that I said at the very start was that I see the coronavirus, the impact of the coronavirus pandemic accelerating by 5 or even more years a number of trends. And I think the adoption of some of the initiatives that have been driven by the fintech industry are included within that acceleration. So I do see the need for banks to be able to to adopt some of those innovations more quickly than perhaps they would have been thinking they had. So the time scale, I think, is a lot shorter for them to be reinventing themselves to make sure that they can actually deal with that. People very often talk about fintech versus the large incumbent banks. I actually think it's fintech working with the large incumbent banks. And if you do look at a lot of the fintech firms, of course, they are dependent on the banks, and a lot of the banks are now dependent on the fintech firms. And if you even look at tech more broadly, and certainly look at the adoption of things such as cloud services, whether it be with AWS or others, this is all just accelerating, the trend line, that we had. It will be fascinating, 2 years from now to look at the curve. God, we're all so familiar now with looking at, the first derivative of most curves these days to see what the slope is. Since we've been looking at what's happening to the R level and things like that on the virus itself. But I think when we look back 2 or 3 years from now, on the adoption of technology within the banking industry, and I mean banking industry more broadly to include things like reg tech as well, it will have accelerated through this period because of this period.
Okay, and now to show that we are truly global, I want to pick up a question from Gasham, who's in Doha, Qatar. Welcome to Qatar, and just to show how international we are. I mean, the question is, what will the typical office, capital markets or banking office look like in the future? Given that we obviously once these times are cleared, we've all said about working from home, but any comments about the sort of the office and maybe what employers will be forced to do because obviously economics is also a determinant here. What they can afford and build. In real estate's very expensive. So any thoughts on the future office for banking or capital markets or non-FIs in general? Yeah, I mean,
I'm of two minds on that one, Robert. So and I haven't come to a conclusion yet on that. It's interesting because in one sense we need less office space and fewer office towers. In another sense, we need more office space and more more real estate footprint because of the need for social distancing. So net, I think we're probably about where we are. One of the challenges, of course, I know at least with a number of the banks, they looked at their space and they figured out that they could fit about half the people, properly socially distanced, at any point in time, in the building. And then someone came along and said, that's all well and good, but how are you going to get them to the floors? Because you can't move that many people in the lifts, in time in order for them to all be there, in normal working hours, which of course only means that you then have to start talking about things like staggered working hours, staggered start times and staggered end times, for the working hours. What does this look like in the future? My own feeling is that it's not going to be much different than what we have today. it's darkest before the dawn. Right now, we all know that we have to stay 2 meters from each other here in the UK, but other countries have determined that 1 meter is actually sufficient. Now, of course, that's not outside, but inside, where, of course, the point of catching the virus is worse. But I think companies, and I really should say this, albeit I'm somewhat biased, especially banks, can be very nimble in terms of the way that they adapt to this. It's not like we have a huge factory floor with huge pieces of machinery, that are fixed in place at a huge capital cost. We deal with desks and computer screens. And I do know from talking with some of my former students, who are off in various different places around the world, these are people who are now M&A bankers. They're probably one of the last who are going to be coming back to the office because they can work remotely, more easily, as others in corporate finance can, certainly as compared to, say, traders. But they've got 2 huge screens now, set up in their living rooms, or their studies or whatever space that they have available, and are working quite effectively from home. So we probably will see people not having to come into the office 5 days a week, but we will get back to something which I think is going to be a new normal, not too different than what we see today.
Okay. I note, obviously, Sir Roger Gifford obviously heard me speaking about him and his green initiative. So he's asked a question. Last time in the crisis 10 years ago, it started maybe as a liquidity crisis. It then became, moved to credit and a whole financial crisis. This time we obviously had a health crisis, which has is becoming an economic crisis, but also could lead into maybe something of an impact to banks, whether it's because of the corporate sector credit issues, or maybe because of the way that we are, So what do you think could be the next year in terms of the impact for banks? Because although we've talked about the way we've all adapted, putting the crystal ball out there in terms of what, a year from now, what could this crisis turn into for banks in terms of a little bit more of an impact?
Well, the banks are going to need to adapt, and there's going to be a change period, and I suspect there's going to be a change back period as well. Again, I remember I'm a former corporate financier, so by definition, I'm always a glass half full, not a glass half empty kind of a person. So I'm optimistic about where the change is going to come, and I'm very optimistic, having spent since the late 1970s, in the banking world, to see how it's adapted through everything. Let's not forget that, probably, Robert, when you and I were first starting, we were seeing interest rates around 20%, and you and I can both remember the oil crisis, where you would have to queue for 3 or 4 hours just to fill up your car with petrol, and things came back to normal, but normal was slightly different, likewise too, 9/11 changed a lot in terms of the transportation industry. I can remember when I could arrive at an airport 5 minutes before a flight, and run onto the airplane and give them my ticket on the plane itself. For those of you who might be in the New York, Washington, Boston corridor, you might remember the Eastern Shuttle, where you ran on and there was no security. We adapt to all of these. Banks will adapt to all of this, okay? We will get back to a new normal. And the nice thing is that I think as an industry, we've got the ability to be able to do that much more easily than many other industries. Okay.
And so just one more question, and then we'll look to the future. Just e-business, one of the things we started with, e-business is globalized banking. There's a question here from, I'm going to say, Alabodi Ilori. Thank you for that. The question was, well, we've got e-business, but what about the risks, the associated risks? And are we just setting ourselves up for a big cyber financial crimes or cyber financial crisis. How about cyber? Because we haven't mentioned the whole internet and the cyber risk here. How do you think banks are going to deal with the whole risk that goes with e-business?
Every bank that I talk with has this as a very, very high priority on that. I did mention earlier in the conversation, that I think it's notable, that at least there's been no public announcements of any major cyber attacks on banks, that have taken place, during this coronavirus. As I say, knock on wood, because invariably there'll be a story on that comes out tomorrow to prove me wrong. But there's been a lot of money spent by the banks on this, and I guess I should also say, one of the impacts on banking, from this crisis may be that the big banks yet again only become even bigger, and the market share becomes even greater for those banks, because they do have the capital. And they do have the systems and the resources in order to be able to invest in a post-pandemic environment where there will be changes to the office, and we will get to a new normal, and there will be money that needs to be spent to get to that new normal, but those banks, that are well-financed, and that tends to be some of those larger banks that are heavily regulated, so regulation has worked in their favor, will be those that have the ability to be able to come out of this quite strong as well. So it's a little bit, didn't quite directly answer the question,
no.
But happy to kind of go back to it. But
Indeed. So I just want to start wrapping up. So firstly, a big thank you to everyone who's joined. There's a huge interest, clearly. Even the questions, I'm sorry, although there's lots and lots of questions there, we didn't get time to answer them all. We'll have to, there'll be a question on a postcard, because we won't be able to do email everyone, because there's so many. But thank you for the interest. This is a fascinating time. Yes, again, as we know from 10 years ago, this is when things move so rapidly, you have to be talking about it. And the only way to find out what you think is to talk. And so let me just ask one final question. Despite all the negatives we've had here, is there one personal benefit, Scott, that you feel has really come out of this, a personal benefit of the coronavirus experience?
Oh, okay. So you're asking me about a benefit. I was half expecting you to say, what's been the major challenge, during this time, because I have to admit, I've got 4 kids, and by the end of this month, 5 out of the 6 of us in that nuclear family, so my wife and I and 4 kids, will have celebrated birthdays in lockdown. By the way, that includes myself, and it includes my one of my daughters, who had a birthday dinner with all of us canceled on the 20th of March, because that was the day. We were all getting ready to go to the restaurant, obviously, and Boris Johnson closed everything down, on that. Zoom doesn't work quite as well, and I do look forward to the time when the 3 of my kids who don't live at home, I can finally hug them again, which I haven't been able to do, since then. Yeah. But I guess, obviously, as a family, we dealt with it. And it's wonderful, I think, as a family. But if I have to say what's changed the most, my garden has definitely benefited from the fact that I've been home every day. So. Yes.
Well, it's good to see the garden. Yes, I think my personal benefit is that having a daughter at home, she's become my technical expert. In fact, as I move sideways, you'll see that. In fact, go this way, you'll see that she's put the photo of herself on the balcony overlooking the City of London to remind me that she's now in charge of my technical support. And
by the way, Robert, I totally agree with that. It's my 17-year-old who turned 17 in the middle of the virus here, who you saw come briefly into the background as well here too. And it's wonderful having somebody of that age, because he's the IT expert in this household as well.
Yes.
So
well, mine's 10, and it's frightening how much they've learned. But thank you to the education system for teaching them and their friends. So clearly, if all these young people who are listening, as well as we're talking about, can grab the opportunities, because although, you know, coronavirus is so, you know, impacting so many people, there's so many negatives, and the banking industry is there to support in so many ways. I think the only really good thing is a positive leadership tone from the banking industry, make people feel that there are some positives. I think that is what we really want to get across here. We are a livery company. We're there to support with a fellowship, with a support in as many ways as we can. So yes, so you know, thank you for your. Yes, sorry, you want to say a final word?
Well, first off, I was going to just pick up on a comment that somebody said in the chat, Robert, which is thanks for clarifying why there was a hand coming out of your head throughout most of the you know, session here on that, which I think is great. But no, I just wanted to thank you as well for the opportunity to you know, to be here together with you, and again to express the gratitude from the business school, you know, for the support that the Worshipful Company of International Bankers has had for the school over many years. You know, and you know, that it really is wonderful. And then the last comment perhaps just to make is, because I see, although I'm not looking at the Q&A itself, but I see there were 51 questions there. If any of them did happen to come from any of my students who will be seeing me in class next week, please feel free to ask what question you would have here, you know, there. And I'm not quite sure how others who had unanswered questions you know, can get them answered, but I'm always somebody who's willing to be able to, you know, one of the wonderful things about being a professor is we love to answer questions. So feel free to email me if you do have any questions.
Okay, and so finally, if anyone wants information about the International Bankers Livery Company, the website is internationalbankers.org.uk. The Master and Wardens we're all there. You can see us, and we're leading the company at the moment. So please have a look. So a big thank you to Professor Scott Moeller. Thank you very, very much for your time today. It's very, very, you know, we welcome so much the ability to talk and therefore hear what people are thinking. And then also I must say thank you to everyone who's participated. Thank you very much, because it's great. We've had so much interest, and we will try and make this available, I think, as a video online as well. So thank you, everyone. And then we'll close it there so that everyone else can have look forward to your weekend and stay safe. Thank you, everyone. Thank you.